Good morning and welcome to Monday's edition of the Bubba Show. Hope everybody had a great weekend. I hope everybody enjoyed themselves, watched some good football. So here we are. We finally got a little action in the market at the end of last week. Basically, as they'd say in the trade, another unchanged week. Of course, we know that throughout that unchanged week was a lot of action, and we rallied. Looked like we were going up to resistance, and as I wrote every day, I thought that we were reaching a peak and a resistance level, and that we would have some sort of, fundamental news bomb that would actually break the market. And of course, I didn't know it was going to be Google, but of course on Thursday, Google came out with, they pre-announced the earnings, and I'm going to address that on Tuesday's show. But the week churned, and it started out very quietly and very tamely with not a lot of things going on. However, as we've been looking at the commodity space, they've been slowly selling off. The dollar, has maintained its weakness here, which is kind of unreal compared to the commodities also going down, because a weaker dollar should mean stronger commodity prices. But the market itself, finally reached a level, and then came off. And the real sell-off really took place on Friday. I mean, let's face it. Even with the drastic drop in Google on Thursday, the market really did not break that hard. And one of the things that was kind of confounding is that the volatility index on Thursday, when the world was coming to an end, when Google was falling apart, was really no big deal. But of course, Friday the market opened, relatively unchanged, and then down she came. Now, where are we? Well, looking forward to this week, we've got to look to be on the negative side. Now, I don't want to sell into the hole. I don't want to short markets. I don't want to, jump in. The world has not come to an end. When you look at the overall picture, last week was unchanged, and we had a slightly down day. 1.5% down. So you have to look at the overall divergences of the market. You have to look at the Russell is weaker. You have to look at Apple has quietly come down about 11 or 12% off of its high. Those are things to start looking at. Now, we don't want to go willy-nilly into shorting markets. What we want to do is we want to look for levels. We want to continue to follow the footprints of the market and put ourselves in the best mathematical position to succeed. That's what trading is about as a trader. So I will say here that I do believe that we have put a temporary top in. This week has some news that can drive the market. The biggest, which will be FOMC, which we'll address on Wednesday. What can they do? I don't know, but we could see some more dissent. One of the things to also look at is the bond market picture. Interest rates started to climb up again, and of course, again, the Fed came in to buy. So what I'm looking for is I'm looking for spots. I'm looking for resistance to sell. I'm really not interested in being a buyer here. I don't think this is the right place to commit new money. I think we have to wait for a breakout to the upside, or we have to find some good support, and I don't think we're here yet. So this is not a place to jump in my opinion. So let's watch how the market trades. Let's try to get a handle for it on Monday and Tuesday. Remember, Bubba's picks. We shorted Apple last week on Bubba's picks, and we've got a couple of winners. So we've been doing really well and really conservative, watching out and watching where things go. Remember, for Monday, the Bubba Show. We'll talk to you on Tuesday. Have a great day, everybody.